All right, everyone, welcome back to the channel. Thank you for tuning in. Yes, it is the weekend, and I'm still going to push out video content for you because this information here is something that I definitely feel that is a extreme important topic that every trader needs to understand and know. It's surrounding smart money, meaning how the institutions they move, what they're doing. What you need to do is pay close attention to liquidity. All right, we're going to identify levels on the chart in which we can actually locate and find liquidity and relate that. Okay, kind of entangle that with market structure in a sense, so you'll understand when it comes to smart money concepts how you can take meaningful or powerful plays, meaning entries into the market and what to look for if you understand structure and what the market is actually doing, meaning what are the market makers doing to kind of trap you. All right, you ever heard the term double tops, triple tops, double bottoms, triple bottoms? Okay, lots of retail traders like to trade on scenarios like that. Okay, basically what it is, when you see the market kind of it may come down to an area, push up, pull back to an area. So it's creating an area basically of support, or can be creating an area of resistance. And when traders, retail traders, see that, they like to take trades where there may be a double top going long, a double bottom going long, or a double top or triple top going short. All right. It's basically a means to where they think that the market is, okay, it's retesting an area of support below. It doesn't want to push below that area. So let me trade going back to the upside, right? And then in reverse of that, if you have triple tops or triple bottoms, it doesn't want to push higher, and retail traders get in the mindset of, it hits this area again where it's struggling to push higher, I'm going to go short. You have to understand that's a trap that's being set up for you as retail traders. You, me, and tons and thousands of other traders out there. You have to think like the institutions if you want to survive in this business. What I want to show you is just a diagram example, and then I want to move over to the chart real quick. And this is just going to be real brief. All right. So if we think about how can we identify key liquidity levels on a chart and how to effectively trade them in relation to smart money concepts, studying market structure and looking at the flow of the market, let's kind of combine that together so that you can set yourself up in looking for great trade opportunities. All right, when we see these type of traps being set up, meaning double tops, double bottoms, triple bottoms, double tops, and, well, let me say that right. Sorry about that. Double bottoms, triple bottoms, okay, or double tops and triple tops, okay. So basically, just where the market is stacking up areas of support and resistance. All right. So if you ever see this happening on the charts, where the market is pushing up, say for example, all right, and we are say in a bullish direction, and the market pulls back, and then it pushes up and pulls back again and makes a double bottom, and maybe it's bouncing off of some area of support resting right below. And then what happens is, a lot of traders, what they'll do is, when the market pushes up, and let's say it broke this area structure, they'll say, okay, if the market comes back, let me grab this arrow to this area here again, where which is support, where the market is struggling to push lower, I'm going to go long, right? Well, lots of times, and most times, retail traders, they do that as soon as it gets back there, and they don't wait for rejection or for confirmation. What ends up happening is that this is setting itself up for an area of liquidity. You have to understand that this right here is liquidity. Double tops, triple tops, double bottoms, triple bottoms are areas of liquidity in which the retail traders see. And the institutions, they set up traps like this to allow retail traders to end up setting themselves up and being hung and being stopped out. They want your money, okay? They're going to run those areas of liquidity that they have basically set you up as like playing a game of chess, all right? They are putting you in a position, using you as a pawn, so that they can later still blast through that zone in which they think that and know that you're going to actually trade on, all right? And they're going to run these lows right here, or these lows right here, or in reverse, okay? They're going to run the tops, okay? The double tops, the triple tops. So they know that retail traders are putting their stops right here, okay? When they set up the trap for you to be able to go short, go long in this area right here, and then you come back, the market comes back, and then you are going long when you see a double bottom or triple bottom. You get ready to go long, right? So your stop's going to be resting right here, okay? So what they'll do is they'll come down, they will break right below this area to the downside, whether it be a sweep or they're closed below, and then they'll turn the market back around and push it back higher. And normally what you'll see happen in areas like this is that this could be in a key area of support. If you trade support and resistance, a lot of times you'll see stacking up to where the market is making double bottoms or triple bottoms. But most times when we're talking about trading, supply and demand, because that's how I trade, and if you're here on the channel watching this, then more than likely you trade supply and demand, there could actually be a demand zone resting right below the area of liquidity. This double top, these double bottoms, where most traders are going to go long at, retail traders, and they know you're positioning your stop right there. So what they'll do is they'll reject this area, right? When it comes back to that double bottom, push it up a little bit, okay? They'll push it up, and then the market will run lower and stop you out, okay? So that they can grab liquidity and move on down to the next. This could be a demand zone resting right here. So once it gets to that demand zone, it blasts back off to the upside. You have to be able to understand how the market moves. And as retail traders, we do not, and I say this in many videos, we do not have any impact when it comes to the market. The institutions are going to do what they want to do, and they're going to do it at any expense or cost, just so at the end, even if they lose a little bit, okay, or put themselves in the red a little bit, trust me, on the back end of it, they're going to come out bigger and stronger and be more in the green than we ever will be, okay? So you have to understand how to see these setups like this to be able to trade with them. That's the goal in this business, is to trade with the institutions, not against them. We want to ride their coattail the moment we see a setup or a play that takes place, right? So this is liquidity. Do not become liquidity, okay? A part of the game that they are setting you up for, okay? This could be a trap right here, and then you're going to trade this double bottom or these triple bottoms right here, and then there's a demand zone resting right below, and then they're going to come to that area, test it. They're going to take this area out. They're going to run this area of liquidity and then hit this demand zone resting below it, and the probability is going to be higher right here. Once they grab, you see this all the time happen. I'm sure you guys have, where they grab liquidity and there's something right above it, right below it, meaning in the area, it could be support or resistance, or it could be, in this case here, because I trade supply and demand, a demand zone, and then they blast off to the upside. All right, same thing here. There could be a demand zone resting right here at the bottom. They break through all this area. You see a triple bottom right here. Oh, most retail traders get the mindset again. Boom, once, twice, 3 times, and they're still not going below it. And then what happens is when the market comes back to this area, you're thinking, oh, a triple bottom, let me go long here, because they're not breaking lower and they're rejecting that area. But right below, there's an area of demand resting below, and it comes to that area and then it blasts off again. So be smart about this. We're going to look at the charts now because I want to show you a few examples. Think logically. Think market structure, okay? Because it's very, very important. And think about key areas on the chart. Look for levels. Look for liquidity, because it's all over the chart. Think about this when we're trading supply and demand. What's resting right below an area if we see a double top, or if we see a double bottom, okay? All right, or if we see a triple bottom or a triple top. See what's resting right below there, okay? Because if it starts to stack up to where you see in double tops and double bottoms, at some point they're going to take that area out. They have got to take that area out, and they are going to run liquidity. It may not happen immediately, but when they do, always be looking what's right above you. Is there something there? A supply area? Is there something below? A demand area, okay? So let's move on to the charts right quick. And people always ask, well, Mike, what typically, if we're talking about in terms or meaning of liquidity, what does it actually mean? How can I classify it? Liquidity is basically just broken down a bunch of stop losses. That's basically what it is, okay? Where retail traders are set themselves up to go in a trade in a certain direction. When they see a double top, a double bottom right here, okay, they come back, and the market comes back to this area, and this is the institution. They're driving this thing back to where they want to get you to engage in a trade right here, all right? And so when you see this opportunity, you go long, right? Because that's what you've been taught. And then when you go long, you're positioning, again, your stop right there. So liquidity is no more than just a build up of stop losses, either at the top end or the bottom end, meaning where there's a double bottom or a double top at, or triple bottom, triple top, whatever the case is. Just a stack up where retail traders are positioning their stop losses, and that is liquidity. That's all it is. Okay, that's all it is. So you got to think, I've talked about this before and I've said it many times. Wherever stop losses are at, okay, someone always has to lose, okay, before someone actually wins. And most times it's the institutions, and we want to trade again with them, okay? So we want to wait for them to play their card and take out liquidity and then trade in that direction, in the opposite direction in which they're going to trade in. Well, not the opposite direction, in the same direction. It's just that they've broken through this area right here, and then we wait for them to test another area. They've grabbed stop losses, they've grabbed money, they grab liquidity. So if we're bullish, they're going to want to take off to the upside, okay? And the flip side, if we're bearish, you want to wait for it to run some means of liquidity to the top end. So you may be saying, well, Mike, can you show me an example? I'll show you a quick diagram. We're just going to show it in kind of the inverse in a sense. If the market was, just kind of pushing lower. So it does this, pulls back, pulls lower, and double tops and double bottoms or even triple tops or triple bottoms can set themselves up in different or many fashions. So what happens is, this is a triple top right here, and then retail traders wait for the market to come back to this area right here, okay? Come back right here, all right? There's liquidity that's already stacked up right there, but retail traders, again, don't think like that. They think that, this is a triple top, it's rejecting it, because it's rejecting against some area of resistance above. Let me go short right here when they get back here, all right? But the retail traders, the institutions see this. They know stop losses are right here. They know that more people are probably going to sell right here, right? So they'll run it for down to a little bit. They'll allow you to think and allow you to take control of the market for a little bit. But there could be an area more than likely right above, which is supply, okay? And then what they'll do is they'll run the market down a little bit, like I did right here, come back, test this area supply, and boom, bingo, they're gone, and stopped you out and took all your money. They stopped you out. So they stopped you out the trade that you're actually in, and they move it in your direction. Have you ever seen that happen? Have you ever been in that situation? Lots of times, right? I've been in that situation before, but I've told myself and I got wiser to what was going on in the markets, and you have to think like the institutions. You have to be able to read structure. That's the most important key concept. I'm gonna tell you that right now. When you are able to, if you can play a great hand of blackjack, or you can play a great game of chess, or whatever it may be. If you're good at playing games, okay, it's the same thing. Just being able to see it and read what's going on in the markets, thinking just like the opponent, okay, which is the retail traders. But we don't want to trade against them, right? We don't want to make moves against them. We want to trade with them again, right? We want to be able to read, what are they getting ready to do? How are they playing the game? How are they setting it up? The market is the institution's chessboard, okay? So we want to be able to trade and outthink them in a sense, so we can trade with them, if that makes sense, all right? So let's move on down. I'm going to go to the charts now. All right, this is the 60 range chart, okay? I want to show you an example. So the market is running lower, right? And it breaks lower and takes out a small area of minor structure right here to the downside. So we're breaking structure to the downside, all right? And as it's doing that, okay, there's an area of supply resting back up in here. You see this area right here, all right? But it pushes down and it pulls back and it breaks lower. So when it breaks lower right here, you can see we have an area of supply resting here, and there's a zone resting here as well, okay, within this structure break to the downside right here, as it broke below this area structure here at 18,837. But if you look on the top end, look what happened. When it started making this run to the upside, it pushed up here, pulled back, and it made another run to the upside, in which it didn't close to the upside. So we got a double top in a sense, okay? Even though it slightly broke above, we didn't break and close to the upside. So this can be considered as a double top. And this is definitely an area of liquidity at the top end of this swing right here. So these swing highs right here, there is liquidity resting right there. Okay, it tried to push above 2 times. So when the market starts to push back higher, you can see it started selling off right here, and you got this strong, selling off right here to the downside, and then it starts pushing back to the upside. There's liquidity resting here at the top end. So this is supply right here, but you have to think that there's a strong possibility they're going to want to test and take out this area of liquidity right here. Again, like I showed you, double tops at the top. The market pulls back to, an area, even in this case here, is supply right here. But look, if you're someone that's looking to go short right here, because again, retail traders are taught that, oh, double top, let me go short, right? So you go short, and I just showed you in that example, that line diagram, you go short, they allowed you to go short just a little bit, right, to pick up a few points, and then they come back and they take you out right here because there's liquidity resting right here. So they went up there. You got your stop probably if you tried to get into the trade like right here at 18,896 or 97, whatever, and then your stop was resting right above or maybe a few points above, you got stopped out. And then anybody who was short right here got stopped out as well, because look, right above there was an area of supply as well, right here. Okay, there was a supply zone resting right here. I'll draw it right here. So they took out and ran liquidity, like I showed in the example above, and then they have supply resting above, so they're looking to tap that after taking liquidity out, and then boom, what does it do? Blast to the downside. The same thing I just showed you in the line diagram setup, okay? Liquidity resting above, right here, all right? Double tops. People want to go short, traders want to go short, that do not understand enough when it comes to how smart money is moving, do not understand the concept when it comes to full-on market structure and what's going on as liquidity is being formed, all right, and set up within the market as a trap, okay? Think liquidity, when you think about liquidity, think about trap. I need to identify liquidity, but I need to identify that liquidity can be a means of a setup of a trap as well. So they run that area, grab liquidity, stop you out, go to the next zone, supply zone, and then the market runs. I mean, look at it. It just ran beautifully to the downside, okay, if you understand what took place and what took place right here. Let's move on to another example. So then the market runs lower, okay? Now look what happens right here. It pushes down, pulls back, pushes lower, tries to push higher here, all right? But it doesn't. It wicks above it, okay? Of course it does. But still, there is still liquidity resting right above this high right here, okay? I'm going to push up, pull back, and then basically it can be looked at as a double top because it didn't break and close above, okay? It just wicked that area out and then pushed lower. So then the market starts pushing higher, all right? Starts pushing higher and starts to create these small little higher highs and higher lows to the upside. If we have liquidity resting, and again, look here, before it even took this area here out, we had another push down, a pullback, okay? Then it breaks lower, then it pulls back right here. There's liquidity on the top end resting right here. You have a high here, and then a high right here, okay? It's going to try to take out all the liquidity that it can, okay? That's the way the market likes to move. It loves to take out areas of liquidity as it's setting itself up, even moving to the downside on all these small little pullbacks. These small little pullbacks were areas where traders went short, okay? Came back here, came back, boom, double top, broke above a little bit, didn't close. When they comes back for a double top right here, they push the market lower, okay? And now the market's stacking up with multiple areas of liquidity right here, okay? So then when the market comes back up, it's going to want to run this area right here, and there's liquidity resting right here. So if we start to make higher highs and higher lows to the upside here, you have to think in terms of what the market is actually going to do. So as it's breaking higher right here, okay, and then it runs this area of liquidity right here, there's a small fair value gap from here to right down here, okay? And lots of times now this area of what supply area right here, if you want to call it that, as it pushed down right here and broke, this was mitigated already when it pulled back right here, as it was setting itself up where we have these triple tops pretty much right here, 1, 2, and then pulls back again 3 times, okay? And a lot of times, it won't be just like within one swing to where there'll be like a double top or triple top or triple bottom or double bottom, whatever the case is. You'll see it where it may pull back, break lower, pull back again, not close to the upside, okay? And it could be its liquidity resting right here. Then it breaks structure, it breaks to the downside, okay? Breaking the area structure to down to the downside. Pulls back. Now you got liquidity resting right here. It runs to the upside. There's a fair value gap resting right there. The market tackles in or hits that area, and then it pushes a little lower. Now, there is demand resting right here. Aggressive buying right here. So think in terms of this. When the market broke higher, it took out an area of minor structure to the upside. It tapped into a fair value gap area, or an area of imbalance, if you want to call it that, all right, as it took out liquidity. It ran lower just for a little bit, okay? But there's liquidity resting on the back end here too. Now you can say, well, could it possibly have moved to the downside? Yeah, it could have. But what it did right here, as it took out liquidity here, it also took out an area minor structure to the upside. So if we're taking out, say, I talked about this, areas of structure back to the upside, then that could be a sign that the market is looking to do what? To want to push higher, right? And what's more enticing is the fact is there's liquidity resting up here as well. So when it pushed up here, ran this area of liquidity, took out an area of structure to the upside, it pulls back. We have a demand zone resting right here. It's going to aim for that area of liquidity. It's going to take out some more areas of liquidity and cover some area that's going to want to move back to the upside here, as you saw. And all that happened into the overnight session. That's why I talked about that, and I showed it in a trade that I took over on the Discord, and I posted it. It was in the evening hours. When was this? This was the 24th. So it was, the 24th. It was the 23rd at the opening of the overnight session. I took a trade up in this area right here because I saw what was taking place. I posted it over in the Discord. I think that was on Thursday evening. Was it Thursday evening? Yeah. And so when I saw what was taking place here, I said, oh, okay, they just took this area of liquidity out. All right, they're breaking structure back to the upside. They're pulling back to demand. There's liquidity resting right here. They're going to aim to take that area out, and that's what they did. So when I saw this open back up at the opening, I waited for a small little pullback to run it back up and take out 720, 725, okay? So pay close attention to areas of liquidity on your chart, but you have to bring in the idea and the concept of market structure. That's what's going to help you, put you in the direction as far as the trades you need to take. Again, if there is liquidity resting to the upside and we're breaking areas of structure, okay, and if the market pulls back to an area of demand and we have liquidity resting right above, they're going to want to run that area. And that could be in the reverse too. If we're moving lower and we're taking out structure and the market pulls back to a key area of supply, okay, and there is an area of liquidity resting below, they're going to want to take that area out, all right? So you have to think in terms of that. All right. And the example that I showed where the market was moving higher and then right below it may have been an area of liquidity. Okay. All right. A double bottom, and then or triple bottom, and the market breaks through that. And there could be a demand area resting right below. They may want to hit that demand area and take off back to the upside. That can happen. Okay. So look for those type of setups on your charts. And back test and just kind of play with it to see, because you're going to see setups like that on the charts. And liquidity can, again, you're going to see it across, doesn't matter what type of charts, time, base, tick, volume, range, it doesn't really matter. You're going to see it setting itself up in different forms and fashion, liquidity in a sense. But I'm telling you, the institutions are looking to set you up and set up traps to stop you out. Again, always think somebody's got to lose for people or traders to win. All right. That's how the institutions think. So think like them. And that's all. I'm going to leave it here. I'm going to leave it on the table here. I'm done for today. I just want to push that video out here and let you know about basically how to identify those key levels of liquidity that are resting within the market and what to expect. All right. Is there something resting right above, or is there something resting right below when they take out a key area of liquidity? If so, then you got to know what they're getting ready to do. If the market is bullish and they're taking out liquidity right below an area, okay, and there's a zone below that, they're going to tap that and blast off to the upside, okay? Especially if they are, I'm going to say this correctly, if they do a liquidity sweep, like in the example that I showed above, okay? So for example, right here, okay, let's say this was this was an area of liquidity resting right here. We had the supply zone, right? They took the whole area out. They ran the whole area of liquidity. They didn't even like sweep it or swipe it. They just they broke and closed above it and then tapped into the supply zone, and then it ran down lower. A lot of times you'll see where the market will run up, it'll wick right above the area of liquidity, tap into in either a supply or demand zone, in this case here, supply, and then continue run to the downside as well. So you'll see it setting itself up in different forms and fashion. So, but that's all I want to share with you guys today. I appreciate everyone tuning in and watching the videos as always. And if you're interested in becoming a Discord member, all you have to do is scroll down, look in the description portion of the video, click on the link, and invite yourself in. It is free. Also, make sure to click on the subscribe button, okay, so that you never miss one of the uploads here on the channel. If you're interested in valuable content surrounding, trading the future markets, whether it's the indices, commodities or currencies. I trade supply and demand, and supply and demand and strategy and how I trade is universal, okay? So if you're a futures trader and you're someone that's viewing this channel for the first time, go ahead and click on the sub button, become a part of the team today. Okay, become a member. That's all you have to do is click on it. It's free of charge to hit the sub button, right? So click on it and become one of the members today. Subscribe. Make sure to also turn your post notifications on so you don't miss one of the uploads. And last but not least, if you found value in today's video, please drop a like on the video. Thank you. Take care and have a great weekend.